Imagine a company that manages more money than the GDP of most countries, with the power to influence global markets at the highest levels. It's not a bank, it's not a government, it's BlackRock. And whether you've heard of them or not, they likely have a hand in shaping your financial future. So why should you care? Because BlackRock isn't just any asset manager, it's the largest in the world, controlling $11.5 trillion in investments across almost every industry. In this video, we're diving deep into BlackRock's operations, financial performance, and recent moves that make it a company everyone should keep an eye on. So, how did BlackRock get so big? How do they make money? And what does their rise mean for the financial world? And for you? Let's find out. BlackRock was founded in 1988 by Larry Fink and a small group of partners with one ambitious goal: to manage risk in a way no one else could. And over the next 3 decades, they did just that, revolutionizing asset management. Today, BlackRock manages over $11.5 trillion in assets, dwarfing many of its competitors. But what's the philosophy behind this financial behemoth? BlackRock's mission is simple yet powerful: to help people around the world achieve financial well-being. And they're not just talking about institutional investors or hedge funds, they mean everyday individuals like you and me. Whether through retirement savings, ETFs, or mutual funds, BlackRock is a crucial player in the financial ecosystem. So how does BlackRock actually make money? The bulk of its revenue comes from asset management fees. Think mutual funds, ETFs like iShares, and pension plans. But it doesn't stop there. BlackRock also offers a powerful investment platform called Aladdin, which uses data and analytics to manage risk and optimize portfolios. This tech-driven approach sets them apart from many traditional asset managers. And let's not forget about BlackRock's ETF business. With iShares, they control nearly 30% of the global ETF market, making it a cornerstone of their success. When it comes to market share, BlackRock is the undeniable leader, but they're not alone. Competitors like Vanguard and State Street also have a massive footprint in the asset management world, and the race to control global assets is fierce. Vanguard, for example, is known for its low-cost index funds, appealing to long-term investors looking for minimal fees. State Street, on the other hand, is a titan in its own right, with its flagship SPDR ETFs attracting institutional money. Despite this, BlackRock remains on top thanks to its diversified offerings and innovative use of technology like Aladdin. But what keeps BlackRock ahead? It's their focus on data and risk management. Aladdin isn't just a product, it's a competitive advantage that provides real-time insights and risk metrics to investors globally, something their rivals haven't fully matched. Let's take a look at BlackRock's financials. In their most recent quarterly report, BlackRock posted $4.4 billion in revenue, with net income exceeding $1.3 billion. Over the past few years, they've consistently grown both their assets under management and profitability, even during volatile market conditions. So what's driving this growth? It's not just their ETF business, although that's a huge part of it. BlackRock's ability to manage risk through a combination of human expertise and cutting-edge technology has made it a go-to choice for institutional and retail investors alike. And while market volatility has affected every player in the financial world, BlackRock's diversified portfolio and global reach have helped cushion the blow, ensuring they remain profitable even in turbulent times. But it hasn't been all smooth sailing for BlackRock. Recently, the firm has found itself in the middle of political and social controversies, particularly around ESG, environmental, social, and governance, investing. While BlackRock champions ESG as a path to sustainable growth, critics argue that the firm is either doing too much or too little depending on who you ask. Some politicians claim BlackRock's ESG policies hurt traditional energy sectors, while others say they're not doing enough to combat climate change. These debates have thrust BlackRock into the spotlight, affecting both its reputation and business strategy. Beyond traditional investments, BlackRock is a growing player in the world of alternative assets, which includes private equity infrastructure and even cryptocurrency. These are areas where the potential for high returns can attract institutional investors, but they also come with unique risks. Let's start with private equity. BlackRock's private equity arm manages billions of dollars, investing in privately held companies that offer high growth potential. They target everything from tech startups to healthcare firms seeking to generate value through hands-on management. This space has become a crucial part of BlackRock's business, as they look for higher returns outside of public markets. But BlackRock isn't stopping there. Infrastructure is another key alternative investment for them. Think highways, renewable energy projects, and public utilities. These long-term investments offer stable cash flows and are increasingly popular with institutional investors. BlackRock is positioning itself as a global leader in sustainable infrastructure, pouring billions into projects that support the transition to clean energy. They recently bought GIP and added an extra $100 billion of infrastructure asset under management to their already oversized portfolio. Now let's talk about cryptocurrency, and more specifically, Bitcoin. In 2023, BlackRock made waves by applying for a Bitcoin ETF, signaling their entry into the rapidly evolving world of digital assets. This move could pave the way for institutional investors to gain exposure to Bitcoin without directly buying and holding the cryptocurrency. Why does this matter? Because BlackRock's embrace of Bitcoin could be a turning point for the mainstream adoption of cryptocurrencies. If successful, their Bitcoin ETF would be a game changer, making it easier for traditional investors to access crypto markets while further legitimizing digital assets. So whether it's private equity infrastructure or Bitcoin, BlackRock is diversifying beyond traditional assets, offering investors exposure to high growth and high risk areas. These alternative investments not only enhance their portfolio but also cement their status as a forward-thinking asset manager in a world of changing financial landscapes. Despite the controversies, BlackRock is not slowing down. They're continuously innovating, with a strong focus on sustainable investing and financial technology. In fact, they recently expanded their Aladdin platform to cater to more industries, emphasizing AI-driven investment strategies. And BlackRock's commitment to sustainability isn't just talk. They've made strategic moves to shift more assets toward ESG-focused funds, betting that the future of finance will increasingly prioritize responsible investing. But with great size comes great responsibility and risk. BlackRock faces increasing regulatory scrutiny, geopolitical tensions, and market volatility. Their sheer scale means any misstep could have significant ripple effects across global markets. Whether it's political pressures over ESG or the challenge of maintaining growth in a highly competitive market, BlackRock will need to navigate these risks carefully if they want to remain the dominant force in asset management. A future of asset management, AI and technology, 2 minutes, visuals, futuristic data centers, BlackRock's Aladdin platform in action, AI algorithms processing financial data, traders monitoring large screens of analytics. Narrator: when we think of BlackRock, we usually imagine traditional financial markets, stocks, bonds, and portfolios, but BlackRock is no longer just managing assets, it's managing data. The company is at the forefront of a quiet revolution in finance, the rise of artificial intelligence and technology. Cut to visuals of the Aladdin platform's user interface and its AI-driven insights. Narrator: at the heart of BlackRock's technological edge is Aladdin, their proprietary platform used by the company to manage risk, optimize portfolios, and provide real-time insights. Think of Aladdin as a supercharged financial brain that's constantly analyzing trillions of data points from across the globe, predicting market movements, and helping investors make informed decisions. Cut to images of AI algorithms and machine learning models processing financial trends. Narrator: Aladdin's artificial intelligence doesn't just process data, it learns from it. Through machine learning, it refines its models, helping BlackRock assess everything from climate risks in infrastructure projects to predicting volatility in equity markets. The platform has become indispensable not just for BlackRock but for over 200 institutions that use Aladdin to manage their own portfolios. Visuals: BlackRock employees working with advanced technology, data centers, humming with activity. Narrator: but this is just the beginning. AI and technology are fundamentally reshaping asset management. With advancements in fintech, BlackRock is exploring new ways to provide more personalized financial solutions, whether it's for individual investors or global institutions. Cut to an animated sequence showing individual investors benefiting from AI-driven investment strategies. Narrator: For everyday investors, this could mean more efficient portfolios, lower fees, and better financial outcomes. BlackRock's tech-driven approach also enables quicker, more precise decision-making in fast-moving markets, giving their clients an edge. Visuals: futuristic screens displaying real-time data, a globe with AI connections lighting up major cities. Narrator: while AI-driven finance promises to bring immense value, it also raises important questions. Can algorithms truly replace human judgment in investment decisions? And as BlackRock increasingly leans on technology, will the personal touch in managing money fade away? Cut to a visual blend of human analysts working alongside AI-driven tools. Narrator: one thing is clear, BlackRock is betting big on a future where AI plays a central role in finance. As the company continues to innovate, the line between human and machine in managing wealth will blur, creating opportunities and challenges that will shape the financial landscape for years to come. Visuals transition to BlackRock's logo and call to action text. BlackRock's story is one of vision, innovation, and unmatched influence in the financial world. From humble beginnings in risk management to managing trillions in global assets, it's a company that's changed the way we think about money. But what does the future hold? With new challenges and opportunities on the horizon, one thing's for sure: BlackRock will continue to shape the financial landscape for years to come. So, what do you think? Is BlackRock leading us into the future, or do its risks outweigh its rewards? If you enjoyed this deep dive into BlackRock, don't forget to like, subscribe, and drop a comment below with your thoughts. At Knowledge Drops, we bring you the business stories that matter most.